Hello, guys. I think this is live. Let me just double check. It should be working. I'm going to be going over the QuantumScape earnings call that just came out. It's probably the most interesting stock on the market. I know Tesla's going to be dropping any minute now, but it's just not really something that I'm too interested in. Okay, I'm live. All right, perfect. Let me get this up here so I could just watch it in the background. And let me get right into it. Okay, so here we got I'll start with the letter, actually, the letter to shareholders, because I think this was it had a lot of good news in it, a lot of good stuff in it that I think is important and that I want to point out to you guys here. So let me just get one more thing set up on my end. Sorry about this, guys. Any second now. Okay, there we go. All right, so I'm looking at the earnings report, and I'm seeing a lot of good stuff. Okay, so some of my main things that are pointing out to me are the milestones. If I'm looking at the milestones, they're absolutely massive. We're seeing the company ship the Cobra-based QSE 5B1 samples and noted their launch program with Ducati Holding SPA in collaboration with the Volkswagen as a high demo of their solid-state battery tech. As we can see, this is the main thing that was on literally the front page. This is meaningful because for a company at this stage, executing on development milestones often matters more than the current revenue. And of course, we're not expecting the company to have $1 billion in revenue first week in. We're expecting the company to grow slowly. And they also pointed to expanding partnerships with major players as well, such as Coming Incorporated and Murata Manufacturing was one of the main ones I saw inside the report. Not only this, but we saw strong cash and a liquidity position which extends their runway for a long amount of time, which is very exciting to see. Let me just post this. And the main thing I point out with this is that having the strong cash and liquidity position and at a level of over $1 billion, this leaves a lot of cash runway through the end of the decade. If we could think into 2029, I think they're fully funded for the next 3 to 4 years under their current plans. And this is including a very capital intensive tech scale up company, which is where having extra runway for a company is very much so a plus. I think it's one of the main things that you're going to need as a company, and you're going to continue to, they're always going to need more money. So I think this is perfect to have over $1 billion in liquidity. Not only this, but they lowered their full year CapEx guidance to 30 to 40 millions from what was expected, as we can see here. And this is very exciting news for anyone who's investing. Not only this, we also saw the introduction of a customer billings metric, which is very interesting. It's one of the first times I've seen that for a stock. The company introduced a new operational metric, which is this customer billings, as I mentioned, and it came in at $12.8 million in Q3. And this is, while it's not GAAP revenue yet, it gives a view of the partner and customer engagement and future contactual momentum, which I think will grow as the company continues to grow. I'll just mute it. And I think this will continue to grow. This may also bridge the gap between what zero revenue and commercial rollout means in investing terms. Not only this, but we've seen the reduction in losses, as we can see by the balance sheet here, and a lot of cost controls. The net loss for Q3 was 105 million versus 120 million over a year ago. Also, operating expenses were at 115 million, and these show some improvement. And I think it's showing that we're getting close to this idea of commercialization. We're getting very close to getting a company that's creating revenue. We're getting very good partnerships in the market that are very exciting to see. And I think they're really driving the future in with this. And I've also was like, I'll probably save most of the presentation for once they start the live stream and start talking about it, because they usually go on cue with that stuff. But I think the main things that came out of this was really that partnerships. The partnerships are absolutely insane for this company, and I think this is very meaningful at a company at this stage. They don't need to create lots of cash to be valued at $15 a share, and not even $15 a share. I think it could even go up to $20 a share by the end of the year, because they pointed at expanding their partnerships with a lot of major players. And I think a lot of major players are also going to be wanting to get in on this type of stock and this type of company, because the technology is really there. That's the main thing. And when a company has this many like aspects of technology, it doesn't even matter um, how fast they're growing, how quick they can get this to market, because they're going to continue to get these customers, and these customers are going to be executing on, as long as they're executing on these developmental milestones. I think that's going to matter more than whatever revenue we see, because obviously the balance sheet, it doesn't look great. I'm one of the biggest like the ASTS guys, if you guys know about that stock, and I'm not even worried about really revenue as a company. You in the stock market, I feel like the main thing you got to value is the expectation. How much are you expecting out of a company? What do you expect out of a company? What are your thoughts on the company in a whole? And I think as a whole, they're obviously not no commercial revenue yet, but we're seeing them start to get to there. And the amount of cash that they have is absolutely insane, as we saw by this report. The liquidity level of $1 billion gives them a very large cash runway through the end of the decade. And I think under the current plans, they will need to use all this cash, and I don't think they'll need to dilute shareholders, which is absolutely massive. I think they're on the forefront of this technology, really, and it is very exciting if you're investing in this company. From everything I've seen, it's all looking good. Especially we saw the capex guidance of 30 to 40 million, which from what was expected, this was obviously lowered, and I think this is very exciting. And for a capital intensive company, of course, it's something to watch, and I think it's very meaningful how quick they've been able to grow this. And I think that's been reflected in the stock price. It's obviously why it's up after hours. It's why it's been up all year pretty much. If we look at it all year, let me pull up the year chart, because that really puts this into perspective. I know like all the stocks like that, like IonQ, all these stocks have been up all year long. But I think one of the most underrated ones have been QuantumScope, and I think this company is really creating the future for this type of rechargeable lithium metal batteries. And this is, if we're being honest, it's really the future. This is the tech that will run the world in a couple years, and it's constantly needing to get replenished. It's constantly needing to create new businesses inside this type of market, and I think it's very exciting to watch. And we've seen, what else do we see here? With regard to the QS ecosystem development, we continue to add world-class partners. On September 30th, we announced an agreement with Corning to jointly develop ceramic separator manufacturing capabilities based on our Cobra process. This is absolutely massive, guys. And I don't think a lot of people, even like the share price right now after hours, it's only at what? $14.98. It is way too low, guys. I think this is some of the best news I've seen for a company. I'm very excited to see what they say on the earnings call. I think if this is what we see from just the letter, then I'm very excited for the call. And obviously, I'm very bullish on the company, but I want to point a couple of concerns that I have are just the fact that there's still no commercial revenue, and of course there are the customer billings we saw of 12.8 million, but there's still no gap revenue, which is fine because it's a company in pre-revenue, so it's not something really you got to worry about too much. And the other thing is how big the expectation kind of is. I think everyone's kind of expecting this company to be one of the biggest lithium battery producers, providers in the next couple years. And I think they're going to have a lot to live up to, but I think they're definitely ready for the challenge. And I think they're building the partnerships. They're putting everything in place that they need for it to be a successful company. And I think we'll see in the next couple years. I mean, they have the liquidity they need. They have everything they need. If I were to give like a very concise summary on the company right now, what I think about the company, I'd say that they're showing very meaningful progress, especially for like a small battery tech firm. But it's still a very high risk, high reward. The execution so far is promising with the partnerships, as I said, the samples that have been shipped. But the real value is going to be unlocked when they move from samples to production and start generating licensing our product revenue. And obviously, I think this will happen in the next 2 to 3 years. And this will be demonstrated with their cost competitiveness and how quick they're able to grow. I think it's easy to believe in the long-term shift to solid state batteries. If you've done any amount of research on this type of technology, I think this is a bet worth considering. And if you're more focused on like stable cash flows, dividends, something like that, near term returns, then this might be an area to watch and maybe wait until the story is a little bit more de-risked. But I do think this is a very solid company to be investing in right now. And the main things I will be looking forward to in the next quarters is the commercial licensing or manufacturing agreements. Anything we could get of this sort would be very important, because we got to think as investors here, does QuantumScape convert partnerships into binding contracts with meaningful, fully large scale? And number two, does the revenue get recognized? When will GAAP revenue begin? And these customer billings are very good, and it shows us that they're on track. But I think investors are going to want to see actual revenue in the next couple months. Also, the manufactured scale-up metrics, specifically the Eagle line, pilot line, which is in San Jose. I think the installation and ramp-up of automated cell production in Throughpoint, they mentioned that they're on track inside the listing here. See our highly automated pilot line, and equipment for certain key assembly steps has already been installed on the Eagle line, and the goal remains on track. I think if they can remain on track for these very big goals, then we should be in for an exciting couple months coming up, and I think it is something to look forward to. Let me turn off this music I got in the background. Let me start listening to this. Oh, they got the classic music on. See, now I love this company, man. This is the music that I actually love. When I turn on an earnings call and I hear this music, I get a little bit excited, because most companies use like medieval time music nowadays, and it's kind of terrifying. This is my type of music though. Like this is. Like you can start dancing to this stuff. Another thing I want to point out is the cost per cell, and it's something I recently just started researching. It's since battery tech is cost sensitive, I want to see if they're approaching cost targets that make them commercially viable. I think they very much so are, but it's just something I think will get brought up during the call, and I will be taking notes on during the call, and I'll be giving my thoughts at the end of the call. In case anyone cares, I bet you guys don't. I don't see any comments yet in the chat, which is upsetting, but it's all right. It happens. The partnerships is another thing, as I was saying earlier, and the new top 10 global automaker. I think that's very important to watch for. And are they moving to the production intent? I think those are going to be the main questions. We could see after hours they're already moving up very highly. We're already at what? 1480. Wow, there we go. I think with the amount of cash, the amount of liquidity, the technology, of course, even though the runway is extended, we're gonna have to watch how much burn is each quarter, and investors will track the capex and operating spend relative to their progress. But me personally, I like the progress so far. I like the story a lot. I would allocate like a modest size of your portfolio given the risk currently, but obviously this is not financial advice. Do your own research, watch the call with me, do your own research. I would set my own criteria for when to increase or reduce exposure. I mean, because I think for example, like when they hit their first major licensing revenue or show scale production, I think you're gonna have to reconsider your positions, see how far. I feel like the stock could grow even to 100 in a couple years, And I think that's something you're going to have to watch for. And obviously, everyone has their own goals in mind. But I think as a long-term hold, as like 5 to 10 years, I think this could be very, very good returns. And I think like you shouldn't be expecting insane returns near term. I would monitor obviously the metrics with extra focus on execution signals more than just hype, because I know a lot of the stock market these days is just like, oh, I was even looking at it earlier today, the Beyond Meat stuff. That stuff's insane. I never even, like, I knew they were a company, of course. I've been to Walmart before, I've been to Target, I've seen these companies, but I never realized that they were even traded on the stock exchange, and that anyone would want to buy shares in a company that has $300 million in debt and barely creates any revenue. But that's besides the point. We're here to talk about QuantumScape. I think the earnings call should be starting here in just a minute. I'll have the PowerPoint up here as well for you guys, and we will go through it together. I don't know if I should zoom this in. If I need to move it, I'll move it, guys. But yeah, if anyone has any thoughts, any comments, drop them in the chat below. I like talking with you guys as well. As I was saying though, solid choice of pre-call music. Very solid choice. I can't hate on them for this choice of music. Let me tell the people in StockTwits. His pre-call is so fire. I think that's some of the nicest music I've heard on one of these calls in a while. And they sometimes play like this song or a different one. It's kind of like medieval time. All right, let me go back. Loading in. Hello?
Good day and welcome to QuantumScape's third quarter 2025 earnings conference call. Dan Conway, QuantumScape's principal analyst, investor relations. You may begin your conference.
Thank you, operator. Good afternoon, and thank you to everyone for joining QuantumScape's third quarter 2025 earnings call. To supplement today's discussion, please go to our IR website at ir.quantumscape.com to view our shareholder letter. Before we begin, I want to call your attention to the safe harbor provision for forward-looking statements that is posted on our website as part of our quarterly update. Forward-looking statements generally relate to future events, future technology progress, or future financial or operating performance.
Long term, this is
our expectations and beliefs regarding these matters may not materialize. Actual results and financial periods are subject to risks and uncertainties that could cause actual results to differ materially from those projected. There are risk factors that may cause actual results to differ materially from the content of our forward-looking statement for the reasons that we cite in our shareholder letter,
what's your price
Form 10-K, and other SEC filings, including uncertainties posed by the difficulty in predicting future outcomes. Joining us today will be QuantumScape CEO, Dr. Siva Sivaram, and our CFO, Kevin Hetrick. With that, I'd like to turn the call over to Siva.
Thank you, Dan. I'd like to begin with one of the highlights of the year. On September 8th, at IAA Mobility in Munich, Germany, we unveiled our launch program with the Volkswagen Group, the Ducati V21L race motorcycle, developed as a collaboration among Ducati, Audi, PowerCo, and QS. The Ducati V21L is a first-of-its-kind vehicle demonstration planned as a showcase for the exceptional performance of our no-compromise next-generation battery technology. As a launch program, the Ducati V21L is ideal. It is a low-volume but high-visibility demonstration that allows us to put the QSC5 technology into a demanding real-world application. The next step for the Ducati program is field testing. Turning to our annual goals, we are pleased to report that during Q3, we began shipping Cobra-based QSE-5 B1 samples, completing another of our key annual goals for 2025. These cells are part of the Ducati launch program and were featured on stage at the IAA Mobility Conference. Our remaining operational goal for the year is to install higher volume cell production equipment for our highly automated pilot line in San Jose, named the Eagle line. Equipment for certain key assembly steps has already been installed on the Eagle line, and this goal remains on track. Another important goal for 2025 has been to expand our commercial engagement, including deepening relationships with existing customers, engaging new customers, and bringing additional partners into our growing QS technology ecosystem. In Q3, we made substantial progress on all three aspects. With respect to existing customers, the successful launch event with Ducati, Audi, and PowerCo at IAA Mobility was a major milestone in our long collaboration with the Volkswagen Group. Last quarter, we also announced a new joint development agreement with an existing customer, and we are continuing to work closely with them as we progress through the first phase of the development and commercialization engagement. We are also in an active engagement with a new top 10 global automotive OEM in addition to our existing customers. With regard to QS ecosystem development, we continue to add world-class partners. On September 30th, we announced an agreement with Corning to jointly develop ceramic separator manufacturing capabilities based on our Cobra process. Corning is a global leader in advanced materials, and they bring deep expertise in ceramics processing and proven manufacturing excellence to the QS ecosystem. In parallel, we successfully completed the initial phase of our collaboration with Murata Manufacturing, have signed a subsequent contract, and progressed to the next phase of that relationship. Our goal is to make QS technology the clear choice by providing our customers with a turnkey ecosystem to serve the global demand for better batteries. With Murata and Corning, we have two of the most world-renowned technical ceramics manufacturers as ecosystem partners, and we will continue to grow our ecosystem further. With our achievements this quarter, our vision for commercialization of our next-generation battery technology is beginning to take shape. We are executing consistently towards our key annual goals, demonstrating our technology, engaging with partners, and building out our capital-light development and licensing business model. Everything starts with execution, and we are proud of our team's performance. This year, we have already accomplished two of our key operational goals, baselining our Cobra process and beginning shipment of the Cobra-based QSE-5 cells, continuing our track record of consistent execution against our goals. Q3 also saw our first public technology demonstration with the Volkswagen Group, the Ducati V21L. We are expanding our collaboration with existing customers and adding new customers, and we have also expanded our global ecosystem of world-class partners. The third quarter also makes another exciting milestone. We are beginning to show returns from our capital-light development and licensing business model, driving over $12 million in customer billings in Q3. Our ambitious targets naturally present many challenges to overcome, and there is much work left to do. Our objective is clear: revolutionize energy storage, capitalize on our enormous market opportunity, and create exceptional value for our shareholders. With this aim in mind, we are excited to update shareholders on our continued progress over the months and years to come. With that, let me hand things over to Kevin for a word on our financial outlook.
The customer
Thank you,
billings
Siva.
shows engagement and
GAAP
really
operating
monetization.
expenses and GAAP net loss in Q3 were $115 million and $105.8 million, respectively. Adjusted EBITDA loss was $61.4 million in Q3, in line with expectations. A table reconciling GAAP net loss and adjusted EBITDA is available in the financial statement at the end of our shareholder letter. We continue to drive operational efficiency consistent with our capital light licensing focus. We revise and improve our full year guidance for adjusted EBITDA loss to $245 million to $260 million. Capital expenditures in the third quarter were $9.6 million. Q3 CapEx primarily supported facilities and equipment purchases for the Eagle line. As a result of efficiency gains and process improvements, including from the Cobra process, as well as a change in timing of certain equipment ordering, we revised the range of our full year guidance for CapEx to $30 million to $40 million. In Q3, we bolstered our balance sheet and completed our at-the-market equity program, raising $263.5 million of net proceeds in advance of the August 10th expiration of our shelf registration. We ended the quarter with $1.0 billion in liquidity. We now project our cash runway extends through the end of the decade, a 12-month extension from our previous guidance of into 2029. Going forward, we plan to move away from providing updates on cash runway and will begin providing updates on customer billings. Customer billings represent the total value of all invoices issued by QS to our customers and partners in the period, regardless of accounting treatment. Customer billings is a key operational metric meant to give insight into customer activity and future cash inflows. The metric is not a substitute for revenue under US GAAP. Customer billings in Q3 were $12.8 million. In Q3, we invoiced VW PowerCo under the upgraded deal announced in July. The resulting cash inflows benefit QS shareholders. They will be directly reflected on the balance sheet as cash when we receive payment. During the collaboration phase of this particular deal, because of the related party relationship with VW, in accordance with US GAAP, a liability of equivalent value will also be created. QS has no repayment obligation with respect to these liabilities. Once relieved, rather than impacting the P&L, this value will accrue directly to shareholders' equity. Payments from other customers or partners we expect will be accounted for differently due to the lack of equity ownership or significant related party ties.
Thanks, Kevin. We'll begin today's Q&A portion with a few questions we've received from investors or that I believe investors would be interested in. Siva, the world's first live demonstration of QS solid-state lithium metal batteries in a Ducati V21L motorcycle premiered at IAA Mobility on September 9th. Why is this such an important milestone, and what are the next steps on your commercialization roadmap?
Then that announcement and seeing the bike ride across the stage was an emotional moment for all of us at QS. And it was obviously a huge milestone. For all of our employees, investors, and partners, this was long in the making. Now, we'll be demonstrating our battery in the field and gathering as much data as possible from field testing. Stepping back a bit, this was a major step in our strategic blueprint. You can think of this as 4 tracks that are running in parallel: the Ducati program, our PowerCo relationship, our other customers, and our ecosystem development. With respect to PowerCo more broadly, as announced at IAA Mobility, we are working toward automotive-grade standards with the goal of a series production car with QS technology before the end of the decade. With respect to other customers, we are working towards commercialization deals with additional automotive OEMs. And of course, we are building out our ecosystem with world-class partners like Murata and Corning so that we can hand our automotive customers a turnkey supply chain to serve the massive and growing demand for our technology. These are the main areas that we have to execute on.
Thanks, Siva. On that note, QS continues to advance discussions with key high-precision ceramics
I
players,
think I see your
most
comment.
recently announcing an
I think
agreement with Corning and advancing
I
our
have a couple
partnership
thoughts.
with
I'll
Murata.
try to share them at the end.
How does
but
this fit into the
the main thing
company's
is that
overall strategy of building out the
this
QS
new
global partner
this
ecosystem?
vehicle, I think, is
What
absolutely
are the key
pivotal, and it
benefits of
shows
this business model and
how
some potential
affordable these are
ways
going to be
QS
and
may receive
how the tech is
economics
really
from these
going to work.
partnerships?
I have more thoughts at the end, though. All right.
Then QS's proprietary ceramic solid state separator is our core IP. It enables our anode-free architecture and its performance advantages. Our strategy involves partnering with specialized high-precision ceramic manufacturers such as Murata and Corning to scale up separator production. These partners would supply QS separators to cell manufacturers like PowerCo, who would handle final cell assembly. Disaggregated model allows QS to one leverage the manufacturing expertise and balance sheets of partners with strong reputations in manufacturing as well as IP protection. Two, ceramic production is a highly specialized skill set, and this allows our cell production partners to focus on their core competency. And three, this accelerates the scale up of our technology by tapping into their manufacturing capabilities. In short, Corning and Murata are part of a complementary and expanding global ecosystem designed to de-risk, scale up, and enable a capital-efficient path to commercialization. We believe each partner contributes unique strengths to help us efficiently scale our separator production into high volumes. As you'd expect, we are continuing to build out the entire QS ecosystems with additional partners.
And just to add on to that, in the fullness of time, the ecosystem would represent a third source of cash inflow under our capital light development and licensing business model. The first is monetizing collaboration and customization work with our OEM partners. The second and largest source of inflows would be licensing, as our customers produce cells using our technology. The third one would be value sharing from our ecosystem partners.
Thanks, Kevin. Can you expand further on customer billings as a key operational metric? How do customer billings translate into cash inflows?
First, to expand on the significance of customer billings. Our first ever invoices, totaling $12.8 million in Q3 2025, are by themselves an important commercial milestone in the history of our company. It's nice to have arrived at the chapter where we're billing customers. I'd also highlight to investors that customer billings are evidence of our capital-light business model at work. On the front end, we monetize development activities for our customers to tailor our core technology to meet their specific needs. Subsequently, as the customer ramps production, we realize royalties over the lifetime of the project. As we continue to develop further generations of our technology, we'll seek to maintain these lines of business to generate consistent and compelling cash flows. Payment for development activities has the benefit of being near-term. The royalty payments represent the majority of the value capture opportunity through a consistent long-term stream of high gross margin revenue. Value sharing from ecosystem partners represents further opportunity for shareholder returns. I'd also ask investors to keep 4 things in mind when interpreting our customer billings metric. First, the metric is not a substitute for revenue under US GAAP. Second, the accounting for individual customer billings may differ significantly. Third, the amounts billed to customers may vary from quarter to quarter due to fluctuations in activity as we progress through various phases of an agreed scope of work. Lastly, it is important to note that future cash inflows can diverge from customer billings, for example, as a result of timing differences, payment terms, prepaid customer deposits, or any adjustments to final payment amounts.
Okay, thanks so much, Kevin. We're now ready to begin the live portion of today's call. Operator, please open up the line for questions.
So far, so good. I think as long as they can expand the partnerships.
Thank you. If you have dialed in and would like to ask a question, please press star 1 on your telephone keypad to raise your hand and join the queue. If you would like to withdraw your question, simply press star 1 a second time. If you are called upon to ask your question and are listening via speakerphone on your device, please pick up your handset and ensure that your phone is not on mute when asking your question. To be able to take as many questions as possible, we ask that you please limit yourself to 1 question and 1 follow-up. Again, it is star 1 if you would like to join the queue. And our first question comes from the line of Winnie Dong with Deutsche Bank. Your line is open.
Hi, thank you guys so much for hosting. First question is, I was hoping you can help me understand a bit more about the joint development of the ceramic separators with Corning, which you recently announced. If you can help me sort of understand maybe some similarities or differences in comparison to Murata. And then on Murata itself, you say you successfully completed the initial phase of the collaboration, and then you've also signed a subsequent contract. Was hoping if you can also there help me better understand the nature of the agreement, perhaps some details of the economics or the technology know-how in terms of the transfer of it. That's my first question. Thank you.
Winnie, thank you. Thanks for the question. As you pointed out, this is an extremely important aspect of our business model, to bring a ecosystem together for QS. And ceramic manufacturing is, as I mentioned earlier, extremely specialized skill set. And we want to bring people with us who can manufacture in high volume, taking our Cobra process and ramping it into the volume, and using their balance sheet to put capital in building these factories up. And so when we started out with Murata about 9 months ago, we both entered into a development agreement where they came in to evaluate what we needed to do, what do they need to do, etc. They concluded that, and we entered to the next system where we start to go ramp our relationship into a much higher level with commitments of volumes, etc. And they understand what are the volumes involved and what our customers' needs are, etc. So we are getting to be in that phase where we can take Cobra and ramp in volume. We have been working with Corning throughout this time as well. Corning had also been under an early development contract with us, and then we came into a more detailed relationship as we announced in early September. And the reason we need two of them is, as you would think, is pretty obvious. The opportunity is so large that it is good for us to have two suppliers. And initially, they'll be complementary in different aspects of the ceramic processing. But I expect over the long term to have a much larger portion that each one of them does. And so both of them are extraordinarily competent manufacturing partners, and they are excited to be part of this relationship. I spent time with both CEOs at length, and they are very, very eager for them to get launched into high volume production to work with our big OEM partners.
That's very exciting.
That's very helpful. Thank you. And then second question is the new metric that you just introduced, the customer billing metric. Was wondering if you can give us maybe a rough idea on the conversion time to revenue or to collection of those funds, and then is that sort of like the main metric then you will be providing over time, as opposed to sort of framing out what revenue could look like in the next maybe 1 to 2 years or so? So just wanted to understand that dynamic a little bit better. And then I think last quarter you mentioned there is some investigation being done in terms of revenue recognition, and was hoping if you can also tie that into your response. Thank you.
Hi, Winnie. So just to outline back the question parts, there was go into the definition of customer billings, talk about their importance, and also on the accounting treatment of VW PowerCo. So I'll take them in order. So just to be on the same page, we define customer billings as the total value of all invoices issued by QS to our customers and partners in the period, regardless of accounting treatment. And where we hope it's useful to investors is it's a key operational metric to give insight into customer activity and into future cash inflows. I think you also had a question on how those translate into the timing of cash flow payments. I did mention in my remarks that you could see a divergence from billings to future cash inflows for a variety of reasons. Those could include things like timing differences in payment from customers, prepaid customer deposits, adjustments to final payment amounts, typical operational considerations there. You asked about the importance. First of all, it is very nice to be in this chapter where we're doing work of value to customers and billing them for it. So that's a nice moment for our company. And on the VW Power Code treatment, the way that the accounting works is the cash inflows, of course, at a broader perspective, benefit QuantumScape shareholders. They'll be reflected on the balance sheet as cash when we receive them. During the collaboration phase of the VW Power Code deal, because of the related party relationship with VW, in accordance with US GAAP, a liability of equivalent value will also be created. A reminder to shareholders, we do not have a repayment obligation with respect to these liabilities. And upon relief of the liability, rather than impacting the P&L, this value will accrue directly to shareholders' equity. So this accounting treatment is specific to the collaboration phase of VW PowerCo. Payments from other customers or partners we expect to be accounted for differently due to the lack of equity ownership or significant related party ties.
Got it. That's very helpful. Thank you.
Question.
I'll pass it on.
Excuse me. Our next question comes from the line of Jed Dorsheimer with William Blair. Your line is open.
Hi, everybody. You have Mark Tudor on for Jed Dorsheimer. Congrats on the B-sample progress and especially the Ducati demo. It's always there's a lot of learnings in actually creating the pack and integration. So congrats on that. During that presentation, VW mentioned cells and EVs by the end of the decade. If we were to take this as 2030, does this track with your development timeline? So if we're assuming that B samples meet all the required cell specs and a C sample stage gate is when you're producing those cells at scale, and 4 to 5 years seems a bit longer than we expected. So what do you think are the remaining technical boxes that need to be checked? And is there any opportunity to pull this forward with VW or potentially a little competition with the other 2 customer engagements you have ongoing?
Mark, thanks for the question. Anyway, just to be technically correct, end of the decade is 2029. Okay, so just to make sure we don't add an extra year into the calendar. The second thing is, look, actual productization belongs to the customer and they announce plans the way they say it. Our job is to make sure we are going all out. We do everything that we can to make sure they are able to ramp as fast as they can. We are working hand in glove very closely with Volkswagen and PowerCo. They know exactly the status of the industrialization because we are working closely with them. And we will continue to do that. Now, in parallel, when we go work with the new customers that we are talking about, both with an existing customer and a new customer, that's a completely independent path from what we are doing with Volkswagen. We don't try to go create competition for our customers, but we work very, very, very closely with each customer, adapting our technical roadmap to their product roadmap. And that work goes on real time so that we can get to market as quickly as possible. But as Kevin points out, in the meantime, they continue to pay us for the development activity that we do together.
Appreciate the color. Thanks, Siva. 2029 it is. I didn't mean to assume 2030 there. Just as a separate track here.
one engineering group to another before the end of the decade, December 31st, 2029.
Got it, loud and clear. About the VW relationship as well, in the last iteration of this, there was some space left in for other potential applications where VW could source cells and sell to other markets potentially. Was this written in to give space to the Ducati program, or should we be looking at even more adjacent markets? Is there any potential there?
Yeah, I actually do not want to again talk for the customer, but you are absolutely right. We are looking at non-Volkswagen Group applications as well into that contract. And Ducati, being part of the Volkswagen Group, would be included in the regular production. And we do expect to have partnerships across both independent of Volkswagen Group with other new customers and customers working with PowerCo that we both work together.
Great, thank you.
And as a reminder, it is *1 if you would like to ask a question. And our next question comes from the line of Mark Delaney with Goldman Sachs. Your line is open.
Hey guys, you have Aman on for Mark. Thanks for taking the questions and congrats on the progress. Maybe on the other two customers that you mentioned in your prepared remarks, Siva, could you maybe help us get a sense of on where the JDA stands with the customer you had announced last quarter and what needs to happen to get that to a more of a complete commercial agreement? And similarly on the top 10 global auto OEM you mentioned you're in active engagement with, what it would take to go from the active engagement to a licensing or a JDA agreement. Thanks.
Aman, thanks for the question. Of course, we are very, very excited about these two additional opportunities. We've been alluding to them over the last couple of quarters as to their maturation. And we've been already in active engagement with them. As always, we let the OEMs do the announcement and we follow them. You saw that at the IAA. We had Volkswagen come out and talk in detail about how they are taking the product in through different applications that they have in mind. The same way we will be doing that with these two as well. As much as I would love to talk about it ahead of time, it would not be appropriate for me to come and tell you how they are doing. But you will see over time, as they start to talk about it more and more, you will get a clearer idea of who they are, what they are doing, and how they are doing. And I'm very excited about these prospects.
I think it's clear.
Thank you for that color. And then
economic.
Maybe secondly on this partnership approach, recognizing the Corning and Murata relationships for the ceramic separator, I think you mentioned the possibility of expanding the ecosystem to other areas for QS. Can you give us a sense of what areas you might be looking to include for partnerships and what the kind of structure of these partnerships looks like from maybe a financial standpoint as well? Thank you.
Yeah, I'll start with the partnership and then Kevin will give you the financial impact of those. Look, we are developing a technology ground up that is very, very different than, and in its both its potential, its capabilities, scale up from regular battery technologies. So wherever possible, we like to include competent and reliable partners from the ecosystem to be with us to invest capital. So we talked about these two with respect to the ceramic separators. We have the high touch transfer. When we develop this no compromise solution, we want to be able to give them whether it is materials, whether it is equipment, whether it is processes, whether it is software, whether it is metrology. We want to wrap all of this together in a package that they can ramp. And in each of this, where we have original IP and where we have unique capabilities, we like partners to come along with us. We want to make it as easy as possible for our OEM customers to ramp production as quickly as possible. And so it would behoove us to bring these partners along. We continue to evaluate additional partners to join the team, and you can see the quality, the caliber of the partners that we choose to work with us.
On the finance side, as much as the cell is differentiated with our solid-state lithium metal technology, with the energy density, the charge time, and the safety, we think that we're equally proud of the business model as well. We think that's good for shareholders. It's capital light. It helps us focus on where we think we add value the most, which is in innovation and customer empowerment. It allows each member of our cell manufacturer, customer, ecosystem player to play to their strengths, which we think is in terms of time and effectiveness and risk-adjusted path to market best. And in terms of how our QuantumScape shareholders see value from that, it really comes from three ways. The differentiation of the cell performance creates value, and our shareholders capture it in three ways. The first would be the monetization of the collaboration work. You saw that in this quarter, $12.8 million of customer billings. Longer-term licensing, when our customers are producing our cells from their factories, we'd get a licensing stream. And finally, it would be value sharing with our ecosystem partners. That together, we think each of those is important in itself, and also gives a robustness to our approach.
Thank you. Pass on.
And as a reminder, it is star one if you would like to ask a question.
I'm ignoring the price right now because it's not moving. The questions have been good. The answers have been good.
And with no further questions at this time, I will now turn the conference back over to QuantumScape management for closing remarks.
Thank you, operator. Finally, today, I would like to take this opportunity to congratulate the entire QS team on their outstanding performance this quarter and the execution that they have shown in making this IAA announcement so powerful and well received. And as always, thank you to our shareholders for their continued support. We look forward to updating you on further progress in the months to come. Thank you.
And ladies and gentlemen, this concludes today's call, and we thank you for your participation. You may now disconnect.
All right, that was a pretty solid call, I would say, guys. If anyone has any comments, I'll read them now. I'll go through what I was writing kind of here on the side. I've followed QuantumScape for a while. I have not invested any money into it personally, but I do believe in it long term. I was saying that long term, I think this is a no-brainer kind of stock, especially as we move towards more lithium solid-state batteries. I think this technology is kind of just in the future of the progress that we're moving, and I think they have all the we've been seeing over the years. It's kind of been building up, and now everything's kind of backed it up. Any ideas who the new partners may be? I mean, that's a great question. There's infinite amounts of companies I could that come to mind. I hope it's Tesla. Yeah, I hope it's something that could move the price, because obviously a Volkswagen is big. It's probably top 10 car company in the world, but so we need something big. A Tesla would definitely move the price very quickly. I think maybe a Toyota is possible. Anything like that. I mean, this tech is really revolutionary, and I think the main things I wrote was for the first time, QuantumScape is showing measurable execution. They finally shipped their the Cobra based QSE cells, which reported 12.8 million in customer billings, and hit every single key technical milestone they promised earlier this year. And that's something that's very important. I think it's hard when a company promises very large amounts and then doesn't return on those demands. And this company has done everything they said they would do and more. And I think the share price is not reflecting of how much they've been able to grow inside of a year. As I was looking at it earlier, 145% year to date. I think they've grown way more. Wait, let me see what someone else is saying in the chat. I did some research on it. Honda has a bilateral agreement with Nissan. I did see that. And job postings gives us away. That could be a very big move if it was to happen. Nissan is a very big company, and I think that would move the stock price a lot. Been following for a while. The tech is promising, but commercialization still feels distant. I think it's closer than you'd really expect. And with the cash runway, the $1 billion in liquidity, I think it's closer than it's ever been. If we're basically at that, not we're knocking on the front door at the market, and we're seeing how fast we could get this to market. And on top of that, we have another OEM top 10, that's Tesla or Hyundai possibly. I did a day's research. Hey man, I trust you more than myself. I only did about 2 hours of research. I started looking at it more before the earnings call, and then during the earnings call I was taking notes. But I think that's a very reasonable assumption to make. I'll have to research it more. I might make a video on it later, because I honestly I've been following it for so long, but I don't know enough to give takes like that where like, oh, I think it's going to be this company investing in, I'm partnering with them or anything. But some of the things I want to point out is the billings. I think it's a huge milestone, and obviously they promised it earlier in the year, but to actually see it is it's a whole different ball game to actually see it, and it's validation that their tech is working and that real OEM partners are willing to pay for early engagement. You've got Volkswagen, Murata, Corning, some of the biggest names in the battery and the material space, which are actively partnering, and that separates them from like 90% of like speculative EV startups that we see. What about potential Panasonic partnership? Um, I have seen the rumors around that, and let me I have seen a lot of rumors around it, but I think they're just gonna be a licensee. But I think it's because they're kind of behind Volkswagen. I'm pretty sure when I was looking into it, they're on like a timed exclusive with Volkswagen. So I'm not sure if that will translate directly to QuantumScape, but it is obviously possible. I mean, I've seen the craziest things happen in the stock market. The thing is, Tesla and US would have massive benefits because of China, material issues, and a node free massive benefits for U economy. Of course, yeah. Any company in the U.S. really recently has just been doing well in the stock market, and I think it's reflectory of kind of like moving away from exporting. And I think it's a company like this. I think is really going to grow tenfold once the tech is actually out. We start seeing any type of revenue on the balance sheet. I think this stock will really fly, because we already see it in the after hours now. We've seen the stock is up, and that's just off commercial billings. There's no gap revenue yet. There's nothing like that. Not saying that it's a bad thing, but I'm just saying it's just we're close at that front door, but it's not there yet, and we're already seeing the stock move up. And I think days like this, where I think the stock could really move up 20 to 30% in days when we see revenue. And aside from this, I wrote the financial side of the company is very impressive. I think it's one of the most impressive things for the company right now as I've looked at it. With over $1 billion in liquidity and their extended runway through the end of the decade, that means they have no need to dilute or raise capital anytime soon. As a shareholder, that is absolutely massive. I'm a huge investor in ASTS. I don't know if you guys have heard of it. I mean, if you guys are looking into stocks, watching earnings calls, I'm sure you guys have. But I've been getting beaten down on it with dilution, and this company really doesn't need to dilute at all, especially with how much their runway is, and their net loss. I wrote down narrowed 105 million, which is showing cost discipline even as they ramp up R&D and production development. Their capex also came in lower than expected, which is showing that management is clearly focusing on smart scaling rather than just burning cash to chase headlines, get partnerships. This is a Chris Mayer 100 baggers in the making. Um, I, I truly do believe it could be a 100 bagger. I mean, it's still very early. I mean, let's look at the historic chart here. What was the lowest it got to? It was around that your last year point when I started seeing it, right? Like around 350, maybe 370. And I mean, it's still so early if you think about it. And I don't know what your price when you got in at, but $300 is very likely. ASTS mentioned, of course. I had to mention ASTS somehow. It's the number one thing on my mind most days. If I'm not thinking about food or schoolwork, I'm thinking about ASTS and other stocks. The biggest signal also is the momentum we've seen in the recent quarter. When you combine the sample shipments, the multi-industry partnerships, and a clean balance sheet, you're looking at a company that's moving out of the lab and into early commercialization. This is exactly the turning point every long-term investor waits for, and it's kind of like when you're at a science fair and you finally see your science fair project do well at the science fair, and you're like, oh man, it's a good business actually. In at 3 to 4, oh then yeah, David, you did a killer job there, man. I gotta start taking your advice. You gotta start a YouTube channel, man. I got 2,100 shares at 5. Man, you guys are both doing great. See, that's when I first found the company, and I started researching, and I was like, because the main thing I use is like stock twits, and I scroll on there most of the day, and I'm always looking at what's trending, what people are talking about, and this stock caught my eye, but I just assumed it was just like another whatever company. I maybe did like an hour of research. I was like, yeah, this isn't too exciting. It's nothing really I can look out on. And I was already investing in like EOSE. I was looking into MVST, a lot of different energy stocks that made me kind of just like ignore this for a while. But if I'm zooming out and looking at the bigger picture here, I think is absolutely enormous. Whoever commercializes solid state batteries at scale will completely redefine what's possible for electronic vehicles. Because these solid state batteries, they're lighter weight, they're faster charging, and they're higher safety, which makes them drastically more energy dense. And it's a technology that could not only disrupt the EV industry, but also I think it is big. It's going to be big inside grid energy storage. I think in aviation, they're going to be used, this type of battery. I think customer electronics over time, once they can become cheaper to produce and more reliable, I think we'll be seeing them in there. I think QuantumScape is kind of positioning itself right at the center of that revolution, and I think they're in a perfect spot for growth and execution over the next few years as this tech continues to revolutionize kind of the battery state. And I know people are going to point out that there's no gap revenue, but that's missing the forest for the trees. You know, you're not buying current earnings with QS. You're buying the potential for an entirely different company once we see the potential for a new energy infrastructure with over $1 billion in cash, the proven technical milestones, and the partnerships. I think QuantumScape now has the time and resources to execute more than ever, and that's what separates them from other EV companies, other companies on the market. I sold my D-Wave in long way to low, so trust me and hurt. You are onto a great thing because QS is so asset light. Look at drones, robotics, and also the R&D recycle. Yep. Of course, with patents which are also sold, China are in a massive tailwind. Man, I agree with you completely, man. I think this company is definitely in the top 3 competitors at the forefront of solid state batteries, and it's going to be exciting to watch over the next few years. Of course, it's a huge market, and there will be some winners, some losers. I think QuantumScape will easily be one of the winners, though. Tesla's showing some volatility. I have not looked at Tesla earnings. Was it an exciting one? I saw the implied move was going to be about 8%. Oh, it only went 3%. And it's down. I don't like listening to Elon Musk talk that much. I feel like, I don't know. He's obviously way smarter than me, 10 times smarter than me. Not even 10, probably 100 times smarter than me. Who am I kidding? But I just, sometimes he explains stuff and it just kind of rubs me the wrong way, and I feel like he's kind of hyping stuff up wrong, and he's just kind of trying to get investment out of people. I can turn it on here. Let me join the call
Of
real
our
quick,
current
just
vehicle
so I can
offerings,
listen to something
which
in
are
the
all
background while I
designed for
finish this up.
autonomous driving. We feel that as
Is that working?
as people experience the supervised FSD at scale, the demand for our vehicles, like Elon said, would increase
All
significantly.
right, there we got Tesla
On the
call.
FSD adoption front,
Let me just finish up
we've continued to see
real quick
decent
my last
progress.
thoughts, and then if
However,
anyone has
note
any
that
questions,
total
I'll
paid
them.
FSD customer base
And then we'll go from there because I have one more paragraph I wrote. I think of course QS is still speculative. The stock will have volatility and patience is required, But from a risk to reward standpoint, I think QuantumScape is one of the few plays that could realistically 5 to 10x over the next several years if they deliver. This quarter gave us proof of life, financial strength, and technical credibility. And if the next few quarters build on that, we might look back at this period as the start of QuantumScape's kind of breakout phase. I'm staying bullish on QuantumScape not because of the hype and all the people pouring in. I'm pointing to the fundamentals, the partnerships, progress that's all finally aligning. And for the early believers, I think this is kind of the inflection point we've all been waiting for. And I think this could be the where we start to see very interesting results coming out. So let me listen to this Tesla call real quick. If anyone's not interested in it, thank you guys for watching. If you have any more questions, I'll mute it and answer them. But I'll be listening to the Tesla call for a little bit. I probably won't listen to all the questions, but if you guys want to hang out with me.
The ramp of Mega Factory Shanghai is happening. This is helping us avoid tariffs because we are using this factory to supply the non-US demand. Like Elon said, grid scale storage, the only way we can get to electricity fastest is by using storage. The other thing to keep in mind is we are seeing headwinds in this business given the increase in competition and tariffs. The total tariff impacts for Q3 for both businesses was in excess of 400 million, generally split evenly between them. Services and other demonstrated a marked improvement sequentially. This was a function of improvements primarily in our insurance and service center businesses. Note that while small, our robotaxi costs are included within services and other, along with our other businesses like paid supercharging, used car, parts and merchandise sales, etc.
How do you think Tesla's future performance might impact QuantumScape? I'm curious about potential sector correlations and investor sentiment effects. I think it's actually pretty closely related. I think that might be the reason QuantumScape's honestly been going down after hours. Here we're seeing it. I think this is a constant. It's going to be a constant. Well, of course, we're going to see the top 10 companies kind of controlling the rest of the market. We see days where Nvidia's red, the whole market's pretty much red, and it's going to continue to be like that. And I think Tesla obviously will move this because of how correlated it just is with electric vehicles and other stuff like that. I think it's always going to have a footprint in it. Tesla robotaxi profits is 20-30 times over margins for Model 3, etc. They need reliable batteries and cheap production material risk from China. Yeah, especially as Tesla's become less profitable, less popular, I'd say, among people. I think they're going to need to find ways to make these vehicles cheaper, lighter, less expensive, but also more durable, because I've been seeing cars blowing up. Like my buddy had a Tesla and it literally caught on fire. He needed to shut it out with a fire extinguisher. So they need to fix something with the models. I don't know what's going on. They had, yeah.
While we are expecting to be around 9 billion for the current year, we're projecting the numbers to increase substantially in 2026 as we prepare the company for the next phase of growth in terms of not just our existing businesses, but our bets around AI initiatives, including Optimus. In conclusion, note that bringing AI into real world is hard, but we have never shied away from doing what is hard. We are extremely excited about the future and are laying down the foundation, the benefits of which will be realized over years to come. I would like to end by thanking the Tesla team, our customers, our investors, and supporters for the continued belief in us.
A 30K robotaxi can make 200 to 300K.
Thank you very much, Vaibhav. Now let's go to investor questions. From Say.com, the first question is, what are the latest robotaxi metrics, fleet size, cumulative miles, rides completed, intervention rates, and when will safety drivers be removed? What are the obstacles still preventing unsupervised FSD from being deployed to customer vehicles?
I'll start off with that, and then Ashok can elaborate.
I'd have to research more.
But we are expecting to have no safety drivers in at least large parts of Austin by the end of this year. So within a few months, we expect to have no safety drivers at all, at least in parts of Austin. We're obviously being very cautious about the deployment. So our goal is to be actually paranoid about deployment, because obviously even one accident will be front page headline news worldwide. So, it's better for us to take a cautious approach here. But we do expect to have no safety drivers in the car in Austin within a few months. I think that's perhaps the most important data point. And then we do expect to be operating robotaxi in, I think, about 8 to 10 metro areas by the end of the year. It depends on various regulatory approvals. But you can actually, I think most of our regulatory applications are online. You can kind of see them because they're public information. But we expect to be operating in Nevada and Florida and Arizona by the end of the year.
10%, 6 months.
Ashok?
I'll definitely research it, man.
We continue to operate our fleet in Austin without anyone in the driver's seat, and we have covered more than 250,000 miles with that.
Awesome, man.
And then in the Bay Area, where we still have a person in the driver's seat, because of the regulations, we crossed more than 1 million miles.
Their market cap's only $1 billion.
And we continue to see that the fleet, robotaxi fleet, works really well. Customers are really happy.
If they can execute, it will be a big company.
And there's no notable issues.
Very
on the customer side,
what's your average right now?
Customers have used FSD Supervised for a total of 6 billion miles as of yesterday. So that's like a big milestone. And overall, the safety continues to be very good. And as Elon mentioned, we are on track to remove the person from inside the car altogether, starting with Austin.
Great. The next question is, what is the demand and backlog for Megapack, Powerwall, solar, or energy storage systems? With the current AI boom, is Tesla planning to supply power to other hyperscalers?
Thanks. Demand for Megapack and Powerwall continues to be really strong into next year. We received very strong positive customer feedback on our Megablock product, which will begin shipping next year out of Houston. And we're seeing remarkable growth in the demand for AI and data center applications as hyperscalers and utilities have seen the versatility of the Megapack product to increase reliability and relieve grid constraints, as Elon was talking about. We've also seen a surge in residential solar demand in the U.S. due to policy changes, which we expect to continue into the first half of 2026 as we introduce the new solar lease product. And we also began production of our Tesla residential solar panel in our Buffalo factory, and we will be shipping that to customers starting Q1. The panel has industry-leading aesthetics and shape performance and demonstrates our continued commitment to U.S. manufacturing.
Really, man? I appreciate that. I'm trying to think of a way I can...
Unfortunately, the next question is related to future products. This is not the appropriate venue to cover that, so we're going to have to skip it. The question after that is, what are the present challenges in bringing Optimus to market, considering app control software, engineering hardware, training general mobility models, training task-specific models, training voice models, implementing manufacturing, and establishing supply chains?
Yeah, I mean, bringing Optimus to market is an incredibly difficult task, to be clear. It's not like some walk in the park. At some point, I mean, actually, technically, Optimus can walk in the park right now. We do have Optimus robots that walk around our offices at our engineering headquarters in Palo Alto, California, basically 24 hours a day, 7 days a week. So any visitors that come by, you actually you can stop one of the Optimus robots and ask it to take you somewhere, and it'll literally take you to that meeting room or that location in the building.
Trucks will take 8 to 10 years to be on roads.
So I don't want to downplay the difficulty of Optimus.
The margins are massive because
it's an incredibly difficult thing, especially it's difficult to create a hand that is as dexterous and capable as the human hand, which is an incredible. The human hand is an incredible thing. The more you study the human hand, the more incredible you realize the human hand is, and why you need 4 fingers and a thumb. Why the fingers have certain degrees of freedom.
I think
why the various muscles are of different strengths. Fingers are of different lengths. And it turns out actually that those are all there for a reason. And
they can
So
fit their
making
tech
it
to any vehicle, including
the
existing heavy
hand
machinery.
and
That is
forearm, because
very.
most of the
Oh, you
actuators,
can't
just
hear
like
me?
the
My
human
bad.
hand, the muscles
I was saying that I think this is a main thing where like I think Tesla's very behind in many regards, in many different aspects. I was even saying it kind of relates to Starlink and how the other stuff is going on, where like in my opinion Starlink is 3 years behind in direct to cell communications, behind ASTS, which is what I'm investing in mainly right now. And the main thing is my channel is the inverted investor on YouTube. See my QuantumScape videos. All right, I'll check them out, bro. Inverted investor. I will definitely check them out. You seem like a super cool guy, man, and I appreciate you coming into the call and giving me this recommendation as well, because I'm always looking for a new stock to check out. I'm always looking for people to talk with about stocks. That's the main reason I started this channel. It's no one my age likes to talk about stocks, but I think it's very interesting how they could retrofit it to any vehicle. That is absolutely massive, and I think that's going to revolutionize the world, if we're being honest. And Tesla's way behind, way behind. From all the earnings call, I've listened to every earnings call since 2020 for Tesla, and they're way behind. Please tell me about your investments. I have a video on my channel if you want to check it out, my friend. I have a video on my channel where I broke down all the stocks I'm holding right now, the percentages and everything. It's kind of top heavy. I'm kind of way too risky, but it is what it is. I'm so young where I feel like I could lose the money now, and I'll be able to figure it out one day. Chirac Savage, what's up, man? It's nice to see you in the chat. How we doing?
So that's why I think like Tesla's in some almost a unique. I think unique position when you consider manufacturing technology scaling, real world AI, and a truly dexterous hand. Those are generally the things that are missing when you read about other robots, that they just don't have those three things. So I think we can achieve all those things, those three things, with an immense amount of work, and that is the game plan. So my
good man, P&L Green.
Fundamental concern with regard to
today wasn't my greatest day on the market, I would say.
If I go ahead and build this,
I was very busy though. To be fair, I didn't really trade at all.
Some point in the future.
I wasn't options trading or anything.
That's my biggest concern.
I'm kind of just holding out.
That is really the only thing I'm trying to address. I had a good day though. Other than that,
did well in school, which I'm excited about.
It's called compensation, but it's not like I'm going to go spend.
The weather was pretty good. Finally, fall. I'm excited for fall.
If we build this robot army
and stuff,
do I have at least
would be great
a strong influence over that robot army? Not control, but a strong influence. That's what it comes down to.
David, I will look forward to any messages. I think my email's in my bio for this account on Google. I don't know. Either way, I'll figure out a way to talk to you.
We've already covered robotaxi expansion.
To get you.
Unfortunately, the question after that is another future product question, so we're going to have to skip that.
Because I'm always
the next one though is
can
you update us on the $16.5 billion Samsung chip deal in
I said the same thing, man. The leaves are finally changing.
And Tesla's AI
the world is
what gives
looking
you
good, I
confidence
say.
Damn can fulfill AI 6 at Tesla's timelines
do you have an email
and achieve
link to your
relatively
YouTube
better
account,
yields and cost versus TSMC?
Okay, so I'm gonna give quite a long answer to this question because
okay, I got your channel.
Question and then answer the unpacked version. So, first of all, I have nothing but great things to say about Samsung. They're an amazing company, and Samsung, it is worth noting, does manufacture our AI 4 computer and does a great job doing that. Now with the AI 5, and here's I need to make a point of clarification relative to some.
Hey man, the AI videos do great these days.
Before, which we're actually going to focus both TSMC
half the competition in
the
finance YouTube
AI 5.
As far as I've seen, like I've been trying to message other people in the niche.
The AI 5
people, it's a lot of people my age.
Is
weirdly, I don't know why it's.
I think it's an amazing design,
but it's a lot of AI.
I've spent almost every weekend for the last
I think I see
few
your
months
email here.
with the
I
chip
will send
design
you an
team
email
working on
after the
AI5.
stream, and we will definitely
And
connect.
I don't
But
hand
no
out
worries,
praise
man. I appreciate
easily,
you
but I
hanging
have to say
out
that I think
and sharing
the
your
Tether
thoughts
chip
and
team
stuff.
is really
And I
designing an
can't wait to
incredible
connect with you more.
chip here. This is, by some metrics, the AI5 chip will be 40 times better than the AI4
They're not that
chip.
great was
Not
a little
40%,
experiment.
40
Hey,
times.
my videos are pretty bad too. And
Because we have a
I'd
detailed
like to say I
understanding
put
of
some
the
time and
entire
effort into
software
them,
and
but
hardware stack.
you know how
So we're
that goes, you
designing
know.
the hardware
It's
to
YouTube. Lovely, thanks. All right.
address
All right,
all
man.
of the pain
If I don't
points in
see you,
software.
I'll just watch this
So
until the questions.
I don't
I
think
don't
there
really
really
want to watch
isn't
all the
anyone that's
questions
doing this
too much
the entire stack
because
all the way through real world.
I mean, it's Tesla. I've seen everything. I've heard everything.
Calibrating against the real world,
It's the
where
same
you've got
stuff every
cars
year.
and robots in real world. That
The stock will drop,
like
and then
we
tomorrow
know what the
morning
chip
it'll be
needs
up
to do, and we know
5%.
what.
We know how this
just
goes.
as importantly, we know what the chip doesn't need to do.
But it was nice talking to you.
To sort of give you some examples here, with the AI5, we deleted the legacy GPU or the traditional GPU, which is it's in AI4, but AI5 does not have. We just deleted the legacy GPU because it basically is a GPU. So we also deleted the image signal processor, and there's like a long list of deletions that are very important. As a result of these deletions, we can actually fit AI5 in a half reticle, and with good margin for the traces from the memory to the Tesla trip accelerators, the ARM CPU cores, and the PCI the PCI blocks. So this is a beautiful chip. I've poured so much life energy into this chip personally, and I'm confident this is going to be a winner.
Another
next level.
LAES and WKUI.
So it makes sense to
All right, I'll put them all on the list.
Both
all on
Samsung
the
and
list.
TSMC focus on AI5.
Let me put them in my notes here.
So even like technically
Very
the
exciting.
Samsung
right,
fab has slightly more advanced equipment than the TSMC
is
fab. These will both be made in the U.S.
I kind of went
TSMC
too
in
heavy
Arizona,
with investing
Samsung
in the summer.
in Texas.
Kind of threw all my capital out. Quantum-based security.
But it's
stop Q-Day. Okay.
We're going to make, starting off, just to be confident.
So how far out do you think that tech would be, the quantum-based security?
Our explicit goal is to have an oversupply of AI5 chips. Because if we have too many AI5 chips for the cars and robots, we can always put them in the data center. So we already use AI4 for training in our data center. So we use a combination of AI4 and NVIDIA hardware. We're not about to replace NVIDIA, to be clear, but we do use both in combination, AI4 and NVIDIA hardware.
Obviously,
and the AI5 excess production we can always
2 to 3 years they have started
data centers
now because RSA is no longer secure.
Yeah,
of course,
NVIDIA keeps improving.
It's only getting security's getting worse.
The challenge
and worse.
that they have
I think
is
that's going to be a
got
big
to
market
satisfy a large
in the next coming years.
A lot of requirements from a lot of customers.
Is going to be very important,
Tesla
especially
only has to satisfy requirements from one customer.
Especially everything you do online
that
is getting tracked somehow. It's getting processed somehow. Everything's a piece of data inside of a huge cog. It's like a web of cogs.
I can't emphasize how important this is.
Resistant Tech V.
So, like when you look at the various logic blocks,
I'll have to look into that a lot.
As you increase
and
the
I'll
number of
definitely
logic
make
blocks,
videos on them.
Increase
because these are all stocks I've never heard of. So I mean,
blocks.
it must
so
mean
think of it like,
other people haven't even heard of them.
There's just highways. Like how many highways do you need?
I'd say I know at least like 1,000 stocks, which obviously isn't crazy.
And especially if you're not sure,
but it's crazy
how much
for me.
data is going to go between.
I'm pretty busy.
Logic block on a chip, then you kind of end up having giant highways going all over the place.
But that sounds very interesting, man.
It becomes an
almost definitely have to look into it.
Design problem, and NVIDIA's done an amazing job of dealing with almost an impossibly difficult set of requirements. But in our case, we're going for radical simplicity. And the net effect is that I think AI5 will be the best performance per watt, maybe by a factor of 2 or 3, and the best performance per dollar for AI, maybe by a factor of 10. So, that's, we'll have to.
Insurance companies will demand security. Oh, of course, insurance companies, health companies.
But
I could probably list 50 different companies that will demand security over the next decade.
Great, thank you, Elon.
And that's only the start.
We've already covered unsupervised FSD. So the next question is, instead of trying to replace hardware 3 with hardware 4, why not give an equal incentive to trade in for a new vehicle?
Yeah, I mean, the stock might spike on that, or do you think it'll be a sell the news kind of event?
Up on hardware 3. However, over the last year, we've offered the customers the option to transfer FSD to their new vehicle, which at times we've been running some promotions. If they got FSD, they can get better preferential rates. So we've been definitely taking care of this, but we do want to solve autonomy first, and then we'll come back with a way to take care of these customers. These customers are very important. They were the early adapters.
Of course.
For what it's worth, my daily
that's the main thing.
Is a hardware 3 car, which
insurance companies are always going to be moving towards, especially I think in the future, this will be all kind of like done by mostly robots. It'll just be reviewed. So security will be one of the most important parts of this, because the people who are able to hack into this will be trying to do it more than ever, and trying to get into this type of data, and it's going to be important to keep it secure. So I think that's a really good investment, man.
Awesome, thanks, Ashok. Alrighty, our final question from Say is, how long until we see self-driving Tesla semi-trucks? And could you see this technology replacing trains?
Yeah, so I guess I'll start with that in terms of the semi-production plan and schedule. So the factory is
Everyone needs to spend on this 3 to 6 months.
Completed the
Oracle database hack was behind.
Now.
Yep.
We've got a fleet.
I mean, it's insane. And we could see, like, when AWS went down for, what was it, like 3 hours, the whole, pretty much everything online kind of stopped. And it just goes to show how vulnerable security really is, and how quick it can be stripped away from us. And we got to really protect it. We got to make sure security's at the forefront of what we're doing. And I think it's a good investment. Now that, like, it's something I've never really looked into. I remember my buddy used to invest in a lot of security companies. He did pretty well during COVID, but since then I haven't heard too much about them, and I'll have to really research it. I put them in my notes, and I appreciate it.
And so we're looking forward to that timeline. And Ashok, I know you can take
scary stuff. Yeah, I mean, it's a scary world we live in, man. You never know when someone could be hacking into me right now, probably. That's all I know, People could be stealing our information, something like that. I don't know. It's scary, but I try not to think about it, or you'd probably go pretty crazy if you were thinking about it.
Questions. The first question comes from Emmanuel at Wolf. Emmanuel, please go ahead and unmute yourself.
Great. Thanks so much. Hi, everybody. So, Elon, you talked about expanding production of vehicles as fast as possible now that you have confidence in the unsupervised autonomy. How should we think about that in the context of your existing capacity of 3 million units? Is that where you're hoping to get volume to? What sort of timeline are we talking about? And would this require some level of boosting or incentivizing demand? Like, would this basically be prioritizing volume over near-term profitability given the longer-term opportunity?
Well, our capacity isn't quite 3 million, but it will be 3 million at some point.
Everything's at some point with Tesla.
Aspirationally, it could be 3 million within. We could probably hit an annualized rate of 3 million within 24 months, I think, maybe less than 24 months. Bearing in mind, there's an entire supply chain, like a vast supply chain that's got to also move in tandem with that. But we're gonna expand production as fast as we can, and as fast as our suppliers can can sort of keep up with it. And then we're going to think about where do we build incremental factories beyond that. Like the single biggest expansion in production will be the Cybercab, which starts production in Q2 next year. That's really a vehicle that's optimized for full autonomy. It, in fact, does not have a steering wheel or pedals, and is really an engineering optimization on minimizing cost per mile, for like fully considered cost per mile of operation. So that's, you know, for our other vehicles, they still have a little bit of the horseless carriage thing going on, where, you know, obviously if you've got steering wheels and pedals and you're designing a car that people might want to go, you know, do fast acceleration and tight cornering, like high performance cars, then you're going to design a different car than one that is optimized for a comfortable ride, but doesn't expect to go, you know, past sort of 85 or 90 miles an hour, and it's just aiming for a gentle ride the whole time. That's what Cybercab is. Yeah, so it's. Do I think we'll sacrifice margins? I don't think so. I think the demand will be pretty nutty. Like here's the killer app. Really, what it comes down to is, can you text it? Can you text while you're in the car? And if you tell someone, yes, the car is now so good, you can be on your phone and text the entire time while you're in the car. It's anyone who can buy the car will buy the car. And a story. I
feel like sometimes Elon Musk just kind of rambles.
They do that, and that's why, in fact, the reason you've seen like there's been an uptick in.
I might end the stream here. Because I'm
not
not following it too much. I have some things I want to just point out, and then I'll probably head off.
Autopilot actually dramatically improves the safety here, because if somebody's looking down at their phone, they're not driving very well. So that's really the game changer. And
so the sales pitch is buy the car,
you know, we
if you want to text and drive.
At this point, I feel, you know, essentially 100% confident. I say not essentially.
I just want to trade and drive. Is that possible?
That we can solve.
That's all I want to really do.
Full self-driving at a safety level.
He is special in two ways.
Much greater than human.
That's the truth, really.
So
I mean,
release 14.1.
Like, I feel like that's going to be a meme at some point.
Technology roadmap. That's
people want to text and drive.
Amazing.
What about drinking and driving? Now, isn't that just going to be possible now? I mean, why not?
Our world simulator for reinforcement learning is pretty
that's the truth.
Like when you see it, the Tesla reality simulator.
Like I don't think
you can't tell.
Like how does he even like know what he's saying when he's like, oh, the texts are what's causing people to crash, even though I bet over half of accidents are caused by drunk driving, and stuff like that, which I doubt they're gonna legalize drunk driving just because Tesla has a car. Oh, you caused a crash and you were drunk, but you were in a Tesla. Oh, you're free to go, man. Like what? What is this guy thinking sometimes?
There are also a number
I think earnings calls have kind of became jokes at this point. I just like listening to them because
that are quite radical.
I like to hear from the CEO. Sometimes they're pretty good.
So
I'm not gonna lie, but Tesla ones.
This car will feel like it is
It's usually just a comedy show.
That's how good the AI will get. With
and of course the stock is going up.
For AI 5.
Of course the stock is going up.
Like I said, is by some metrics
you can't explain this stuff anymore, man.
Let's just say safely.
I feel like it's rigged from the start. It's got to be rigged from the start. It's just got to be.
It might almost be too much intelligence for a car. I do wonder, like, how much intelligence should you have in a car? It might get bored. Actually. And then one of the things I thought, like, well, if we got all these cars that maybe are bored, well, while they're sort of, if they are bored.
CEO of Kodiak AI started company because his friend was killed by truck.
And say like, well,
that's horrible.
Actively driving.
I mean,
let's just have a giant.
Yeah, I mean, accidents. You're more likely to die inside of a car than in a plane,
you know, point, if
roller coaster, lightning, all this stuff that people are scared of. Actually, people do every day. You drive a car every day, and people aren't scared of it. But it's way more scary. I mean, you're driving 100 miles an hour, and you're trusting other people to not kill you pretty much every day.
A kilowatt of inference
But
capability of
I don't know. Once, obviously, I think autonomous cars will be a thing one day. I hope it's not in my lifetime. But
with
who
power
knows,
cooling
right?
with cooling and power conversion taken care of. So that seems like a pretty significant asset.
Great. Thanks, Elon. The next question comes from Adam.
Wait, you get lost over there?
From Morgan Stanley. Adam, please feel free to unmute yourself.
I think you fell asleep at the mic.
Adam, go ahead and ask your question.
Yeah, I'm not mad about that.
Seems like we might be.
If that's the end.
Adam, so we'll come back to you.
Because
the next question will then come from Dan from Barclays.
Hi, good evening. Thank you for
Adam's gone.
taking the question.
He might be getting fired after
Elon,
this. We
I
might
know
never
that,
hear from
Tesla's really focused on with Master Plan 4
from
bringing
him on
AI
the job.
into the physical world, and I think we've seen over the past, this willingness for Tesla to engage and go into new markets, new TAMs. So when you think
what
about
they have done with Kodiak is put Airbus level redundancy in brakes
really
and steering, as well as amazing model, LiDAR, and
versus
sensors.
where do you draw the line for markets or
that's very interesting,
AI applications?
And you've pretty much sold me on it at this point, and I'm definitely going to be checking it out. And I see myself investing into it in the future.
Tesla's core competency.
But I think people, I don't know why Tesla's up right now. I'm just going to ignore that. Actually, I'm just going to leave the call because I have my thoughts already written down. And I don't really want to listen to Elon Musk talk about stuff that doesn't matter to me. And I think at this point, his calls are kind of a joke. And a lot of the market sees that. And I think it doesn't matter. So what they have done with Kodiak is put Airbus level redundancy in the brakes and steering. That is very, it's very impressive. I'd have to really look at the tech. I swear on my life, I haven't heard of that company until you came in the chat today and mentioned it to me. But now that you have, I am very interested in it, and I want to put all my money in it. The way you described it, you could be the salesman. As well as amazing model, LiDAR, and sensors. The best YouTube video you can watch is a few years old. It's an hour-long video with Kathy Wood, researchers. You like Kathy Wood? Doesn't she have the ARK investment? Researchers. I don't think she's the best. Kathy Wood is invested. Okay. I'm not the biggest fan of Kathy Wood, if I'm being honest. I'm also kind of on the standpoint that she doesn't know as much as she claims to know. But of course, every investor, you're not gonna be accurate 10 out of 10 times. But I feel like she's off probably 50-50. Like it's like throwing a dart at a dartboard and seeing if you're gonna hit bullseye. It's pretty rare actually to get a really good analyst pick. Don't like all of her investments. Okay, see that's a fair take, man. Because I don't like most of her investments, but if you say there's a good video and it's gonna help me understand stuff better, I'm all for, 100%, yeah. Because I've seen good stuff. I'm not gonna lie. Of course she's not a bad investor. She wouldn't be running a multi-million-dollar fund that of course I'm not running. So she's got to know something that I don't. But at the same time, I think some of her rationales and some of her moves are pretty stupid. All right, let me just quickly break down the Tesla earnings. We've seen the revenue is up to 28 million, which is 12% year over year. It's ahead of expectations, but I still think it's pretty low. Deliveries came in at 497,000 vehicles, proving that demand remains resilient, even though there's the EV competition and a lot of price issues. Let me share the link. I'd be awesome, ready to check that out. Drop it in the comments, man. I think the fact that Tesla was able to grow its cash reserves, it gives it more flexibility to invest in different technology, different companies, more autonomous driving and energy storage, which it connects right back to QuantumScape. You know how that stuff goes. Gross margins improved. to 18%, suggesting Tesla may finally be stabilizing. Because I know they had the price cuts and it was a tough spot to be in earlier this year, but it looks like that. Everything being said, their profitability is obviously still the main concern, with net income falling about 37% year over year, showing thinner margins and softer pricing still weigh in on the bottom line of the company. And the main things that I think Chinese automakers like NIO, BYD, those are companies I've researched a lot, and I think they're rapidly scaling production at lower costs. And investors were also looking for stronger signals about the next wave of kind of products, and we didn't really hear much. I mean, of course, I was listening to it. He mentioned the excuse me. He mentioned the robotaxi slightly, but I think what investors really wanted to hear was updates on the robotaxi, concrete progress in full self-driving software, and affordable mass market vehicles that they could produce in high quantities and sell out, because people obviously enjoy the Tesla technology. I know people who don't like Elon Musk, but they like their Tesla. And I think that's the main thing they got to continue to grow. Make this more affordable car, make it in more houses' hands, and just continue to grow that kind of footprint. Because if people enjoy the product, they're going to stick with it despite the CEO, whatever's going on with the company and stuff. Even with all the concerns I was mentioning, I think it's hard not to say at least you could be a little bit bullish on Tesla, because they have the brand dominance, global charging infrastructure. I mean, there's parking lots like 10 minutes away from my house that are just Tesla station like parking lots. They have the expanding AI driven product ecosystem, and I think the balance sheet gives them a cushion. As I said, having this 41 billion in cash reserves gives them a cushion for innovation. And Elon Musk likes to focus on high margin areas like energy storage and autonomy. And I think this could shift Tesla away from just car manufacturing more. And if margins continue to recover and different catalysts come in, especially with the robotaxi, as we were discussing earlier in the stream, I think that Tesla could reignite growth and continue to grow in the next year. But I don't think that this was a pretty bad quarter. It's more of a stabilizing quarter, nothing special. I think the stock honestly should be down more in after hours. The stock didn't move much at all. Tesla proved it's still holding demand and it's preserving cash, but it maintains to be something where you're kind of thinking, man, I need better leadership at this point, especially when there's tough macro, micro, competitive environments. It's no longer hyper growth. Like, if you're investing in Tesla, you're not expecting hyper growth. At least I hope not, unless you're listening to some spotty friends, you know. I think it's positioned in a good spot in the EV space, but for long-term investors, I think these earnings are reaffirming that they're kind of the center of the EV world. But I think the next few quarters could change that, especially with how fast different companies are growing and how much we've seen progress be made in different companies across the market. All right. If anyone has any more questions, David, it was a pleasure talking with you today, man. I will do research. I will email you right when I'm get off the stream. I might go eat something real quick, and then after I'll email you. And I'm very excited for this company's future. I mean QuantumScape. I'm not Tesla. Let me get off this. I don't want to look at it. I don't care. I want to look at QuantumScape, a company that I'm falling in love with more and more. And I think it's a great company to be invested in. And I will continue to be researching it, continue to research other stocks. There's a lot of opportunities on the market. Of course, the market is very overvalued, let's be honest. But I think if we're looking at it from an intrinsic level, there is still companies that are at this point where they're at a point where you're still going to make good returns in the next couple years, and you just got to be at the right point in the company. And especially as we see production and stuff happening, I think it's important to be at that point in companies, because if you're investing these days in the S&P, I'm not saying it's a bad idea. I'm just saying locking in yourself to 8 to 10% gains a year, it's not worth it with how much inflation has gone on, how much corruption is going on across the world. I mean, and it's just my personal opinion. I'm obviously an outlier probably in that, but for me, it's just not worth it. Of course, I think if you're just if you don't have the time to do research, you don't want to research, then your best bet is just sticking it into VTI and calling it a day. But if you have the mental capacity, you have the analysis in your head, then you might as well give it a try. And you listen to people online. I mean, it's not a bad call. QS is the best company I own, hands down. See, now you got me really excited. I don't know if you watched my stock like portfolio breakdown. I don't own any QS, which now it's making me sad. I do have some cash on the side though. I do have Bitcoin I can sell and buy some QS. I might do it tomorrow because the more I research it, I'm seeing even at $15 a share, I think it's wildly early in the company. And I was even saying $20 end of year earlier, like as a joke, but it might be realistic. You get one partnership news and you're pretty much there, if we're being honest. So it's definitely something to look forward to. But you will get opportunities. Yeah. Okay. You think so? What do you think a good price target would be for quarter? QuantumScape. There's natural volatility and price pockets, of course. There's constant. I mean, today even what we saw it at 13, 14. What else? We've seen at 12. I think anything in the $13 to $14 range, I'd be pretty happy with an entry at. If I could, I'll try to do it tomorrow, but we'll see. The dilution is almost over. I agree. I mean, with $1 billion in cash, I mean they shouldn't have to dilute till 2029, given this burn rate. But I would 3 to 6 months then price surge. I agree. I would agree completely. I think that there's no point in holding back on an investment like this, especially knowing what we know. We know the technology works. We have the partnerships. I think more partnerships are going to come out soon. I think like on the call, I was going to say it, but I didn't want to interrupt the call. He was kind of saying that there is another partnership in the backlines, but he didn't want to announce it on the call because obviously it would go against regulations. But I think the wait is definitely almost over. I would say anything today at 13 was great. Yep, 100%. The actual shareholder letter says that part of that is over, officially over. See, I mean, that's very exciting stuff. Very exciting stuff, man. 2 to 3 OEMs equals 100. Oh, easily. I mean, you got me excited. I'm not even invested in the company. I mean, what's the market cap right now? 7.7 billion. What would it take to get to, let's say six? Just say conservatively, like a $50 billion market cap, assuming a 20x multiple. You'd really only need about 2 billion, 3 billion in yearly revenue, especially with the high margins that they have, especially on the especially on the investing front. 5 years. I agree with you, man. I was saying 3 to 5 years. This is probably one of the best long-term holds on the market right now. I'll share my pricing DCF. 2 seconds. Okay. I'll stick around for it. I'm excited for a pricing DCF. I'm still in the call. Are they playing music? No, they're not. What? I was enjoying the music too. I'm not going to lie. I'm not going to sit here and say the music wasn't good. It was one of the first times I enjoyed the pre-call music for stock. How long you been investing for, David? Let me get a water. $20 years. Man, you got me beat. I'm only 21 years old. Obviously, I'm bald, so it kind of makes me look like I've been doing this for 20 years. But I want to hopefully be as experienced as you one day. Like that's my goal in life. Not to toot your horn, but you seem very impressive the way you articulate your thoughts, the way you've been able to communicate your ideas with me in a very short amount of time. Like I'm pretty much sold on what was it, Kodiak already, and then I'll have to do more research into the other companies that you gave me. I have them in a spreadsheet here. You are very, very impressive. Thank you, my friend. Munger would be proud. Oh, dude, Charlie Munger's everyone talks about Warren Buffett, Jack Bogle. The real go is Charlie Munger, for being honest. And I think he understands. Obviously, I think compound interest is the greatest wonder of the world, but you need to have capital to do that. And coming from my position, like I worked hard to get to where I was at, but it like if I kept it inside of just the S&P in 15 years, oh, you got a couple million, you can retire, whatever. But is that really like that's not going to give you a long-lasting life, and you could retire obviously with like 3-4 million, but I want to leave something behind for my kids and maybe their kids, and they could be looking back and they're like, oh, this was all thanks to our grandpa that we can do this. And like I don't know, I never grew up with too much, and I really want to create something bigger than myself, and I just enjoy looking at stocks as well, finding undervalued stocks, undervalued markets. Munger is so underrated. Oh man, you're a man of class. I'll tell you that, man. I'm excited to send you an email. We'll definitely have to hit something up, hop into a call or something. If you got Discord or what else can we do? Discord. I think Twitter has a phone, Instagram, whatever works best for you, man. And we'll talk it out. Because I know typing's probably annoying. Like I remember I used to spam in the like I used to go into stock like earnings calls and I would talk in the chat and I would get annoyed because you'd have to type so much and then your message wouldn't even get read half the time. But yeah, where are you from, David? If you don't mind me asking, of course. I'll wrap it up here any minute now. I just want to finish up this conversation with you. The UK? I got family over in the UK. I'm actually originally a Polak. So I don't think there's any rivalry between the Polacks and the UK. I could be wrong. I have a friend in England. Yeah, of course. Yeah, I've been to the UK once. I enjoyed it a lot. I enjoy Ireland a lot too. I know it's completely different. It just reminded me of how much I enjoyed Ireland though because it's so close by. All of Europe is very condensed. If you look at it on the map, it looks very big, but then you actually go there, and I mean, you could go from Poland to England within 2 hours, whereas like over in the U.S. where I'm at, like 2 hours, maybe you'll move over a state pretty much. It's kind of annoying. But yeah, once I have enough money, I think I want to move back to Europe. I think it's moving in a better direction than the U.S. personally, but airline captain of many years, worked in a hedge fund before flying, studied software engineering and derivatives, got into value investing because of my pension. Man, that's awesome. That's an awesome story, dude. I'm in college right now. I don't love college, if I'm being honest. It's my parents really want me to get a college degree. I was trying to explain to them like, oh, I'll start my own business. I'll do this. I'll do this. But I feel like a lot of the stuff that we're taught in schools, you could learn yourself online, and you could learn anything's at your fingertips as well. Like if you have the drive to do something, I think anything's possible, and I feel like a lot of people have proven that. Learn more from reading around the See, there we go. That's exactly what I was just saying. I mean, reading is one of the greatest tools that I think men have, not even men, I mean people have lost as a whole culture, society. we've moved around away from physical. Everything's digitalized. No one connects with each other anymore, really. Obviously, it's pretty worrisome, but than I ever did from the banks. Yeah, I believe it. Your parents are right in some ways. As college teaches you to research, you're clearly a high IQ, clever guy. Winners and winners, and you are a winner. Dude, I appreciate that. I wouldn't say I'm no smart guy, you know. I just think I I don't know. I think too much. That's my thing. I think too much, you know, and that's why I like stocks. I think so much because it gives me something actually useful to think about and apply my brain like to. Because if I'm not thinking about this, like my days suck most of the time. If I'm not thinking about this or I'm not doing like some type of sport or some type of reading or something, your parents can go figure. At 20, you're looking at all the right things. Thank you, man. I really appreciate that. And I will definitely send you an email. You better respond to my email. If I email you and I don't get a response back, I'm gonna be pretty upset. Because I'm gonna be in Ireland next summer in the UK. So we could definitely meet up. You seem like a super cool guy. I'd get drinks are on me. The first few drinks are on me. You're a super cool guy, man. And I think you have some good investment theses here, and I might be up all night now researching these 3 companies that you gave me, and I'm excited to do it, you know, because it's just what I like to do. It's actually what I like to do, man. But I appreciate you hanging out with me, and you being in the stream today. We had a couple people in here today. I'm not gonna lie, it was more than usual. Done. Love Guinness? Alright, brother. Guinness is on the house for me, man. I actually do like Guinness a lot. I like Stella Artois the most, probably. I was just, I don't know if I could even show this on stream. I was sipping a Truly before the stream. And it's just like, it's just something to relax your heart a little bit, untensing yourself. Especially after a long day, you're just trying to listen to some financial reports, read some metrics. You're not trying to kill yourself out here. But we'll definitely have to meet up, my friend, and we'll stay in touch. I will be sending you an email shortly, so look out for that in your Gmail on that account, and hopefully I'll hear from you soon. But other than that, have a great rest of your night, man. Peace. Be safe. Have a good night, man, and thank you for being here.